Good day! Our topic for today is statement of changes in equity. So, ang related standards dito ay sa lahat ng financial statement ay PAS 1, Presentation of Financial Statement. So, first, let us define what is equity. Equity is defined as residual interest in the asset of an entity after deducting all of its liabilities. So, equity is equals to asset minus liabilities. Equity is equivalent of net asset. So, net asset, ito yung total asset minus total liabilities. In a corporate entity, the following subclassifications may be shown separately. Share capital, funds contributed by shareholders equal to the FAR or stated value. So, ang share capital ay always sa FAR. Share premium, funds contributed by shareholders in excess of FAR or stated value. So, kapag merong excess sa FAR, share premium. Retained earnings, which may be unappropriated and appropriated. Statement of changes in equity. The statement of changes in equity is a formal statement that shows the movements in the elements or components of the shareholders' equity. An entity shall present a statement of changes in equity showing. So, ito yung mga kasama or pinapresent sa statement of changes in equity. So, first, effects of change in accounting policy using retrospective application or correction of prior period error using retrospective restatement. So, dito sa letter A ay meron tayong nakabukod na slides. So next, total comprehensive income for the period. So yung comprehensive income ay tinatransfer siya or kinoklose siya sa retained earnings. And then yung retained earnings nagre-reflect siya sa statement of changes in equity. Next, for each component of equity, a reconciliation between the carrying amount at the beginning and the end of the period, showing separately changes resulting from profit or loss, other comprehensive income, and transactions with owner. So, component of equity, katulad ng sinabi ko kanina, ito yung share capital, share premium, retained earnings. Accounting policies are the specific principles, bases, convention, rules, and practices applied by an entity in preparing and presenting financial statements. An entity is required to outline all significant accounting policies applied in preparing financial statement. So, accounting policies, meron din siyang sariling standards. So, ito yung PAS 8, Accounting Policies, Changes in Accounting Estimates and Errors. So, accounting policies, ito yung mga principles, basis, convention, rules, and practice na ina-apply ng entity sa pag-prepare or pag-present ng financial statements. So, yung accounting policies ay nagmula sa mga accepted standards like GAAP, PFRS, IFRS. Next, change in accounting policy. Once selected, accounting policies must be applied consistently for similar transaction and events. Nire-require ni PAS 8 na magkaroon ng consistent selection and application of accounting policies. So, for example, kung weighted average cost formula yung ginamit sa inventory, so kailangan consistent yung pag-apply doon. So, kailangan kada period ay weighted average cost formula yung gagamitin. So, pinapermit ni PAS 8 na magkaroon ng change in accounting policy kapag nire-required ng accounting standard or an interpretation of the standard. So, kapag nire-required ng PFRS, the change will result in more relevant and faithfully represented information about the financial position, financial performance, and cash flows of the entity. So, nagkakaroon din ng change in accounting policy kapag yung resulta ay mas reliable or more relevant information. A change in accounting policy arises when an entity adopts a generally accepted accounting principle which is different from the one previously used by the entity. A change in accounting policy usually results from change in measurement basis. So, for example, change from weighted average to people cost formula for inventories, change from the cost model to the fair value model of measuring investment property. So, nagkakaroon ng pagbabago sa measurement basis. Change in accounting policies are accounted for using the following order of priority. So, first, transitional provision. So, kapag hindi available yung transitional provision, so ang measurement ay retrospective application. Kapag hindi pa rin available si retrospective application, ang measurement ay prospective application. So, ang requirement na statement of changes in equity, ang change in accounting policy, ang measurement ay retrospective application. Retrospective application means adjusting the opening balance of each affected component of an equity for the earliest period presented and the other comparative amounts disclosed for each prior period presented as if the new accounting policy had always been applied. So, from the term retro, ibig sabihin nakaraan. So, hindi lang yung prior period yung i-adjust, pati na rin yung subsequent period. So, yung mga nominal account ay kino-close na. So, ang destination nun ay sa retained earnings. So, dahil nga hindi na pwedeng baguhin or hindi na pwedeng i-adjust yung mga nominal account na naka-close na, ang adjustment ay sa beginning balance ng retained earnings. Errors. Errors include misapplication of accounting policy, mathematical mistake, oversight, or misinterpretation of facts and fraud. Prior period errors are errors in one or more prior periods that were only discovered either during the current period or after the current period but before the financial statements were authorized for issue. These are corrected by retrospective restatement. Retrospective restatement means restating the comparative amounts of the prior period presented in which the error occurred, or if the error occurred before the earliest prior period presented, restating the opening balance of asset, liabilities, and equity for the earliest prior period presented. So, retrospective restatement, ang i-adjust lang ay yung sa prior period. So, hindi na i-adjust yung subsequent period. So, for summary, retrospective application, applying a new accounting policy as if the policy had always been applied. So, retrospective application mula subsequent period hanggang prior period ay i-adjust. Sa retrospective restatement, correcting a prior period error as if the error had never occurred. So, sa retrospective restatement naman, ang i-adjust lang ay yung sa prior period. So, hindi na i-adjust pa yung sa subsequent period. Illustration, shareholders' equity. Kalimba Company provided the following information at year-end. Share premium 1 million, accounts payable 1.1 million, preference share capital at FAR 2 million, ordinary share capital at FAR 3 million, sales 10 million, total expense 7.8 million, treasury share ordinary 500,000, dividend 700,000, retained earnings beginning 1 million. What is the shareholders' equity at year-end? Preference share capital na 2 million plus ordinary share capital na 3 million plus share premium na 1 million plus retained earnings beginning na 1 million plus net income na 2.2 million. Sales minus total expense 10 million minus 7.8 million is equals to net income na 2.2 million less treasury shares na 500,000 less dividends na 700,000. So, ang total shareholders equity, 2 million plus 3 million plus 1 million plus 1 million plus 2.2 million minus 500,000 minus 700,000, 8 million letter A. Illustration, shareholders equity. The ledger of ABC Co. in 20x1 includes the following. Share capital 100,000, share premium 20,000, retained earnings appropriated 18,000, retained earnings unappropriated 42,000, revaluation surplus 30,000, remeasurement of the net defined benefit liability or asset gain 15,000, cumulative net unrealized gain on fair value changes of investment in FVOCI 23,000, effective portion of losses on hedging instrument in a cash flow hedge 10,000. Cumulative translation loss on foreign operation 5,000, treasury shares at cost 13,000. What is the total shareholders equity? So, share capital 100,000, share premium 20,000, retained earnings appropriated 18,000, retained earnings unappropriated 42,000, revaluation surplus 30,000, remeasurement 15,000, cumulative gain 23,000, effective portion of losses less 10,000, cumulative translation loss less 5,000, treasury shares less 13,000. So 100,000 plus 20,000 plus 18,000 plus 42,000 plus 30,000 plus 15,000 plus 23,000 minus 10,000 minus 5,000 minus 13,000, ang total shareholders equity ay 220,000. Illustration, preparation of statement of changes in equity. Entities A equity as of December 31, 20x0 consists of the following: share capital 1 million, retained earnings 700,000, revaluation surplus 300,000, total shareholders equity 2 million. The following occurred during 20x1 and 20x2. 20x1 entity A reported profit of 200,000 and total comprehensive income of 220,000. 20x2 entity A issue additional shares with an aggregate fair value of 500,000. Entity A reported other comprehensive income of 50,000 and total comprehensive income of 350,000. Entity A declared dividend of 100,000. Requirement: prepare the comparative statement of changes in equity for the year ended December 31, 20x2. So, dito yung heading, entity A, ito yung name ng entity, and then, next yung financial statements. So dito, statement of changes in equity and then yung date for the year ended December 31, 20x2. So dito, share capital, retained earnings, and revaluation surplus, saka yung total equity. So balance, January 1, 20x1, ito yung December 31, 20x0 sa given. So share capital 1 million, retained earnings 700,000, revaluation surplus 300,000, total shareholders equity 2 million. So 1,700,000, 300,000, and then 2 million. So changes in equity for 20x1, profit for the year 200,000, other comprehensive income 20,000, and then total comprehensive income ay 220,000. So base rin naman to sa given sa problem. So entity A reported profit of 200,000 and total comprehensive income of 220,000. So, ito yung profit, 200,000, and then yung total comprehensive income na 220,000. So, 220 minus 200,000 ay 20,000 yung other comprehensive income. So, ang balance ng December 31, 20x1, share capital, 1 million, retained earnings, 700,000 plus 200,000 is 900,000, revaluation surplus, 300,000 plus 20,000, is equals to 320,000. So, ang total equity ng December 31, 20x1 ay 2,220,000. So, changes in equity for 20x2, profit for the year 300,000, other comprehensive income 50,000, and then total comprehensive income ay 350,000. So, base rin naman to sa problem. So sabi sa problem, ang nag-report daw ng 50,000 comprehensive income and then total comprehensive income na 350. So, other comprehensive 50,000 and then total comprehensive income na 350. So, 350 minus 50,000, ang profit for the year ay 300,000. So, sabi rin sa problem ay nag-issue daw ng additional share na 500,000 and then nag-declare ng dividends na 100,000. So, 500,000 and then less 100,000. So, sa share capital, nung balance ng 20x1, 1 million plus 500,000. So, ang balance ng 20x2 ay 1.5 million. So, sa retained earnings, ang balance ay 900,000 plus 300,000 minus 100,000. So, ang balance ng 20x2 ay 1.1 million. Revaluation surplus, ang balance ng 20x1 ay 320,000 plus 50,000. So, sa 20x2 ay 370,000. So, the total equity, December 31, 20x2 ay 2,970,000. Illustration, reconstruction of financial statements. ABC kuha the following information for 20x1. Accounts receivable turnover 10:1, total asset turnover 2:1, average receivable during the year 200,000, total asset January 1, 20x1 is per 100,000. Requirement, compute for the total asset as of December 31, 20x1. So, first step, kailangan mo nang makuha yung sales. So, sales are computed as follow. Accounts receivable turnover is equals to net credit sale divided by average account receivable. So, base dito sa problem, so accounts receivable turnover ay 10:1. So, 10 is equals to net credit sale divided by average account receivable na 200,000. So, 10 is equals to net credit sales divided by 200,000. Ang net credit sales ay 2 million. Continuing, Total asset turnover is equals to net credit sale divided by average total asset. So, ang total asset turnover ay 2:1. So, 2 is equals to net credit sale na 2 million divided by average total asset. So, average total asset is equals to 2 million divided by 2 is equals to 1 million. So, average total asset is equals to total asset beginning plus total asset end divided by 2. So, 1 million, ito yon nakuha kanina, is equals to total asset beginning ng 400,000 plus total asset end divided by 2. So, 1 million times 2 minus 400,000. Ang total asset December 31, 20x1 ay 1.6 million. Next is statement of retained earnings. Statement of retained earnings is now part of the statement of changes in equity. The statement of retained earnings shows the changes affecting directly the retained earnings of an entity. Itong statement of retained earnings ay hindi talaga siya formal na financial statements. Parte siya ng statement of changes in equity kasi pinapakita nito yung changes or galaw ng retained earnings ng entity. Items directly affecting retained earnings, net income or loss for the period. Kapag merong net income, so ina-add ito sa retained earnings dahil ini-increase nito yung retained earnings. Kapag naman net loss, dinededuct naman sa retained earnings dahil dinidecrease na yung retained earnings. Prior period errors. So, ito yung adjustment sa beginning balance ng retained earnings to arrive at the correct beginning balance. So, kapag ang net income ay understated, so, ang errors ay ina-add sa retained earnings. Kapag naman ang net income ay overstated, ang errors naman ay dinededuct sa retained earnings. Dividends to shareholders. The dividends declared or paid during the year shall be deducted to retained earnings. Effects of changes in accounting policy. So, same ng prior period errors, ito yung adjustment sa beginning balance ng retained earnings. So, kapag ang net income ay understated, so ang effect ng change in accounting policy ay ina-add sa retained earnings. Kapag naman ang net income ay overstated, ang effect of change in accounting policy ay dinededuct sa retained earnings. So, ito yung example ng retained earnings. So, retained earnings January 1, 1 million, less correction of error prior year under depreciation, change in accounting policy from weighted average to people inventory valuation resulting in increase, so plus 300,000 is equals to corrected beginning balance na 1.2 million, plus net income for the period, less dividends declared during the year, less appropriated for contingencies is equals to retained earnings December 31.